Hello traders, welcome to the video. In this video I will be showing you a very simple price action video that you can use to trade the boom and crash market. So as we all know that the boom 300 did not always accept our indicator strategy. Only few indicators can be used to trade the boom 300 and crash 300 market because of the way the market looks. So, and two, I discovered that some few number of people who watch my video on this channel also love trading price action videos. That means all the videos I have released without indicator, they love them, while most of the people who watch my channel love the ones that require indicator, because everyone loves things that you just see the signal on your chart, you press buy, you make money, you are out, not stressing yourself drawing lines on the screen just like what you see over here. So without wasting much of our time, let's head straight to the video. But I want you to listen to everything I will say in this video, because every single step in this video is very important for your profitability. So pay attention. So as we all know, the market, let's say this is 2 points, point A, and this is point B. If market want to go from point A to point B, the market will not move straight like this. It is not possible. You guys that have viewed chart many times know that it is not possible for charts to just move like this in a straight line. So the market always moves, retrace, move, correct itself, move, correct itself, move, correct itself, move, until it reach point B. And the same thing for the uptrend. The market did not just move on a straight line to the point it's going. Let's say this is A and this is B. The market do not just move on a straight line. So what the market will do is it will go up, correct itself, go up, correct itself, go up, correct itself, go up, correct itself, go up. So in this movement, you can make money at this point, at this point, at this point, at this point. Even in between this movement, you can make money on every movement of the market. But here, where we want to make money from is, let's say the market moves like this. So where we want to pay our attention to is this point. We want to ride this trend to the upside to this point. Let me change the color so that you can understand what I'm trying to say. So we want to ride from this point to the upside. Then if we draw this from this point to the upside, then if we draw it from this point to the upside, that is where we want to ride. And for the downtrend, so if this is 2 points, point A to point B, this is the downtrend, correction, retracement, correction, retracement to the downside. So where do we want to ride? So here we want to draw this way, this way, this way, this way, and we want to ride from this point to the downside to this point, from this point to the downside to this point, from this point down to this point, then from this point to the level that it is meant to go. So that is what the illustration that I give on my chart is giving right now. All this drawing that you see over here, that is what it is meant to do. First thing you need to look is, we want to know the direction of the trend. As you can see on my chart, this is the 5 minutes time frame. If you look up here, and this is the boom 300 index chart. Boom means that the market is spiking to the upside, spiking to the upside. But in some situation, the retracement can be more than the spike. Retrace, spike, retrace, like that. So, and in some situation, spikes, retrace a bit, spikes, retrace a bit, spikes, retrace a bit. But don't worry, in both market conditions, we can actually trade both markets. The first thing we want to look is, we want to come to our 5 minutes time frame. This is where we look at the overall trend of the market, and the 1 minute chart is where we actually enter our trade. That is the entry time frame. So now, even a layman who has known nothing about trading can easily know that this market is going downtrend, and we all know that downtrend makes a low, a lower low, a low, a lower low, lower low, lower low, lower low. So let me use this for example. So as you can see over here, as market is coming down, it makes a high, but you know in this trend that the market is going down, so you will mark the last low before it make another low, and you know once it's coming back, it's going to break it. So immediately the market breaks it, you enter a sell, and then hold still, it makes another low. But how do you know? You don't know when it will make another low, so you can just catch some movement of the market and exit the market, or you can just hold for a longer period of time, because you know that the market is still on a downtrend movement, and if you see this strong 2 movement, you can exit your trade at this point. Market comes down, make another low, retrace to this side, then drop again to break this, and you enter at this point. But let me show you something. If we look here, the market touches it, rejects from it, forming this candle with longer wick. So here it has not break, so we are not entering. But immediately it breaks at this point, the next candle that forms will be our entry, which is this one. But don't worry, I will show you the entry on the 1 minute time frame. So let me explain this. And if we hold our trade, the trade is still going down to this point. Then if you look carefully, it traces up again, and when it is coming down, it breaks it. So immediately it breaks it and close below it. If you look carefully, you see that this candle close below that zone that we draw. So we enter at this next point and we ride the trade to the downside until it reverses. So at this point we close our trade. So, and for the uptrend, if we look carefully, we see that this is the zone before it makes it down, and it is going up. Immediately it closes above, we enter a buy. Then if we look, we have a bigger zone here. Immediately it closes above, you see there is no retracement, we enter another buy, and we hold our trade still this point. So this trading between here is a very sweet trade because there is no retracement of candles. Let me zoom in so that you can see that there is no red candle in between this point. So all you just see is spike, 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 spike to the upside. So if you go on a 1 minute time frame, you will see how it looks. Let me just go there and show you how it looks. So this is it. You see, spike, spike. Immediately you see this retracement. I've taught you how to use Fib to enter a trade. So let's say from this zone to this point, it does not touch. But if we take to this point, we see that it comes to the 38.2 level at this point. So, and from that, everything else is a better tomorrow. Spike, 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 continues to spike to the upside until we reach this level before we see this big retracement. So assuming you enter here, your stop loss is between this zone. You are not expecting markets to break inside and start going down, no. So your stop loss can be tight enough to be inside this zone, and you enter at this point, then you cash this to this point or to this point. So imagine how much you will make. That is like maybe 7 RR. So if you are risking $1,000 on that, you are making $7,000. So if you go back to our 5 minutes time frame and we look at this carefully, you see, oh, I think this is where our Fib can actually work. So if it closes above, then some people, maybe to be on the safer side, you can just take the Fib, drop from this zone to this zone, and enter the market at this 38.2. Then because we are using the Fib, we can make our stop loss to be at the other level, because we are not expecting market to go and break this other level. For this point, we can also put our stop loss at 100 level, 32 to 100 level. you can maybe, to be on the safer side, you can avoid the zone and place at the other level, because we are not expecting the price to dip into the level and take in the 100 level. So here, if we go on the 1 minute time frame, you see it from this zone to this zone. You enter at the 38 level, your stop loss at the 100 level. You know, I said according to my last video that the market can retrace into the 50 level, even into the 61.8 level, but that does not invalidate our setup, because we are thinking about the 100 level. Then immediately it enters this 32 level, retrace a bit for like maybe 5 minutes, you see a spike that takes you out of the zone, another spike, and the rest is history. So same thing for here. So let me go to the entry point for these ones that I have given for you guys. So let me go back to the 5 minutes time frame. That is the one that is over here, over here, over here. After you have seen the market to retrace and it break this zone, then you go to your 1 minute time frame straight away. So once you are there, then you can draw your fib just like as you do later, from this point to this point. Then you enter at the 38.2 level, your stop loss at the 100 level. But sometimes the market can just break out and keep going down without giving you opportunity in the fib level, or it can just go touch maybe the 20 level of the fib or 30 level of the fib without reaching the 38 level of the fib. So market is dynamic, anything can happen. Let's say you see this setup, then you take your fib, you draw from this point, or let's say from this point to this point. If you look over here, draw from this point, the market enters into the 38.2 level, comes out, go back into the 38.2 level, then your stop loss will be here. So this is a very sweet setup that you can see. So if you look over here, goes down immediately, like the one I first showed you guys, which is this one. You see that if you take from this zone to this zone, the market did not enter the 38.2 level over here, but here it enters nicely. So if we take from here, the market breaks out, then we will take our fib and we draw from this point to this point. You see, this is too big, so we are not trading like this. So we can just wait for this spike that touches the zone, then this retracement, then we take our fib, because we know that the market is still going down from this point to this point. Market enters the 38.2 level, comes down, enter into the 61.8 level, then retraces just like that. So that is how to use this simple price action strategy for trading the boom and crash market. So you can actually use it also for your boom 500, 1000, 300, crash 500, 1000, 300, 600, 900, and so on. This strategy is also, you can also use it for volatility if you want, because it is price action, it is not indicator. It can be used for most of the market. That is everything for today. If you find this video helpful, don't forget to click the subscribe button, like the video, turn on the notification bell so that you get notified anytime I drop new video. Thanks for watching.